Hi there, welcome to Kneppy Invest, and welcome to the last day of the week, the month, also the financial year. So exciting. We can sell all our stocks that have not performed for tax reasons and be done with them. However, in saying that, I have actually never done that before. And I have not done that this year. In fact, when I look at my portfolio right now, all three portfolios, I like what I see. And I had a look at my super account, and it's up 26% in the past year. And you have to be happy with that. In fact, any sort of year, you have to be happy with a 26% gain in your super account. Anyway, so an okay day on the markets. Now, I won't be bringing you any tweets today because most of the tweets I have seen lately have been in regards to the US presidential debate, and I don't really care about that. I think fairly similarly about all politicians, and it's not good thoughts. And I don't think there's much difference between Biden and Trump. In fact, the differences between those two politicians are just semantics. And I just can't believe America can't can't put in the race two people who are not over the age of 150. That is probably my biggest gripe. They're just too, both of them are just too old. That's just my opinion, however. And to be honest with you, there's not much difference between Democrats and Republicans. Just like in Australia, there's really not much difference between the Labor and the coalition. There's small differences, but there's no big differences. And as I've said before, politicians, all they care about is themselves and getting re-elected. They don't really care about the country and the future of the country they are leading. Well, supposed to be leading. Anyway, enough about ranting and politicians. So the agenda for today's video is to go through the ASX Today. We'll have a look at the best and worst performing indices, sectors, and also companies. And then we'll have a look at some announcements. In fact, I did have trouble, difficulty coming up with the top 5 announcements of the day. So I'm going to name it top 5 companies of the day. And I do have 6 possible top companies of the day. And we'll go through that. And I might have a look at some charts at the end of the video, but I don't know what charts to look at just yet. I might decide as we go through looking at the best performing companies and the worst performing companies later in the video. Okay, so let's start today looking at the ASX, and everything's green except mining. Another negative day for mining. Didn't have a look at what has happened in terms of commodities in the past 24 hours. So gold's down. Let's have a look at the chart for gold. Yeah, it's just going sideways right now. Copper up a little bit, but still, it's still going down. Still going down. Oil is up a little bit. Oil's actually looking pretty good right now, doesn't it? Silver, yeah, silver right at a very important, or just above very important support level. A lot of greens here, by the way. What about bonds? Bonds, well, particularly Australian bonds, well, nothing much happening there either. Nine ore, Iron ore's had a little bit of a bounce today, I've just noticed. There we go. And it looks like lithium's down. But who cares about lithium right now? Well, I suppose those who are holding many lithium companies care about lithium. And the main thing about lithium is waiting for the bounce. Well, not the bounce, waiting for the recovery. And we might have to wait a few years. Just don't know. So anyway, so mining's had a negative day today, and tech's had the best day overall. I suppose it's an okay day, and compared to the American markets, they were up slightly. You'll say up slightly. Okay, so let's have a look at the best performing sectors and indices before we have a look at the companies. So we already know IT's had a good day. In fact, the IT sector up 0.94, just behind IT's healthcare and utilities. And the worst performing sectors, apart from materials or mining, is staples, down 0.28%. So for those who have heavily invested in defensive stocks because they are fearing the future, they've had a bad day as well, down 0.28%. So we're talking about Woolworths, companies like that. Yeah. Gold's had a good day. So again, gold's doing different things than other mining companies. And resources, the ASX 200 resources is down. Let's have a look at the rest of the indices. And yeah, metals, mining, materials, and resources, the worst performing indices. And the best performing indices, apart from IT and health, is yeah, gold and utilities. Emerging companies is doing well as well. So let's have a look at the ASX 20. So I'm assuming it's up a little bit. Up, wow, it's almost flat, isn't it? Up 0.05%. And I'd say based off that, 11, no, I'm going to say 10 companies up, 9 down, 1 flat. Oh, well off. 14 up, 5 down, 1 flat. So those companies down must be down a bit. So mining, BHP, Rio Tinto, Fortescue, all down. Although, didn't iron ore have a bounce? So maybe that's wrong. So maybe Woodside was energy. Can't remember energy. Anyway, and then I'm assuming WiseTech's had a good day again. REA Group, CSL, healthcare. So yeah, CSL is healthcare. So let's have a look at the worst performing. Yeah, Rio Tinto, Fortescue, and BHP. And there's Woolworths. Again, defensive down. Wesfarmers, all necessarily called Wesfarmers defensive. And for some reason, ANZ Bank is down as well. But yeah, Rio Tinto, Fortescue, BHP are three of the biggest mining companies in Australia. Yeah, all down. And WiseTech, there's WiseTech, by far the best performing company in the ASX 20. Then Transurban, Aristocrat, Goodman Group, and QB. And there's a few energy companies down the list. So energy is having an okay day today. So let's have a look at the best performing companies. I don't anticipate many companies that are a bit of surprise here because I don't remember many announcements being released today. So East33, I did mention this company in yesterday's rundown video. They are an oyster producer. They fell a little bit yesterday. They're up 30% today, but on fairly low turnover. Actinogen, I will look at the chart for that company. 3 up days in a row for Actigen. So let me just put my notebook on the side so I can remember to look at the chart for that company. Otherwise, just low volume, small companies. I'm going to have a look at Encounter Resources as well. That chart is starting to look pretty good. They did release an announcement a few days ago, and I'm pretty sure I did feature that company or talked about that company. And otherwise, well, Pointerra. Here we go. Pointerra, one of the companies I do want to feature in my top 5 companies of the day. And finally, they've released an okay announcement. However, in saying that, this is not the sort of announcement I would get too excited about. And there are reasons behind that, but at least they had a good day for shareholders. And for those shareholders who want to sell out, they've maybe found that opportunity to sell out today. So let's have a look by market cap. Clarity Pharmaceuticals, WA1 Resources, Spartan Resources, Strike Energy, Cetice had a bit of a bounce, which is understandable. They're down big. Baby Bunting, another good day for that company. I might have a gander at that chart because they've had 2 good days in a row. I'm going to have a look at Clarity Pharmaceuticals because that hasn't been popping up onto my radar for a while now. And WA1 Resources has been all over the place. And I might have a look at Spartan Resources as well. And otherwise, as we go down the list, Biome, another great day, another possible company to look at. I did see that company featured, I think it was Bell Potter, saying that company has a significant growth potential for them in the next few years. I did see a tweet or something about that. And EZZ Life Sciences up 13% again today. So I'm doing fairly well with that company. And why not? We'll have a look at the chart for that company. But beware, I am a shareholder of that company and been a shareholder for quite a while. Now on to the worst performing companies. Oh, no, let's hope none of the companies I own are in this list. What the hell is this? Global X Ultra Long Nasdaq 100 Hedge Fund. What the hell is LNAS? It's not very unusual to see that sort of thing in this sort of lists. Why is that down 17.8%? I'm just a little bit curious about that. Says there's no thing found. Is that real? I have... geared returns that are positively related to returns on Nasdaq. Okay, whatever. What's going on there? Is the is the Nasdaq futures down big? Probably not, because our market will be down big as well, I would assume. I do know there are a few companies. Don't think these companies are on Nasdaq though. might be on the New York Stock Exchange that are down big because of negative results. And I am going to discuss those companies. But anyway, this weird ETF is down among the worst performing companies on the ASX, but it says financial services, doesn't say ETF. I'm going to take a closer look. LNAS. Let's have a look at the chart. Well, that's ugly. It could be just illiquidly. Yeah, I don't know. I don't know what's happening here. Maybe Nasdaq is going to have a really bad day overnight, or bad night day for them. Yeah, have a look when you wake up, or sometime during the weekend. Have a look at how the Nasdaq has performed, because maybe this could be sort of a harbinger of what's to come on the American markets. Who knows? Down 18%. That's sort of interesting. Need to do a bit more research on that. Otherwise, nothing of note in this. Going down the lists. And so let's have a look at by market cap. And there's Guzmán Gomez is down, finally. Finally, Guzmán Gomez is down. I'm waiting for the share price of this company to drop to about $10 before I become interested in taking a position in that company. And then another ETF, ACDC is down. What's happening with some of these ETFs and financials? Oh, that's listed as a financial services. So there's no ETF sector, apparently. That's interesting. Bannerman, I did hear or see Bannerman release something today. Was it a capital raising? Yeah, capital raising. So whenever a company raises a capital raising and the share price is down, it doesn't. And Imitep is down again. I might have a look at the chart for that company because they had a bad day yesterday, another down day. Novonix, a lot of volatility there. 4D Medical did release something. Oh, a few companies here that could have featured into my top 5. 28 secures at the market funding. Okay. Yeah, it's just funding. And that's all she wrote. I do like Metarock. I do think that company is undervalued. 67 million. There are reasons behind it, but it's rallied 69% this year, which is understandable. And by the way, I am a shareholder of that company. That's more of a longer term value play. Okay, so let's have a look at the top 5 announcements, or no, the top 5 companies in the day. And I have not ranked these companies. I'm going to start with non-ASX companies. Yeah, let's do that. Non-ASX companies, and 2 of these companies are going to be ranked together. And then company number 1 is going to be Pointerra, because there's nothing else to talk about today. Okay, so the first company I want to talk about is a company called Walgreens. So Walgreens is listed, I'm assuming, on the New York Stock Exchange, because it's not really a tech company. And this is not a pharmaceutical company. It's a pharmacy company in America. I did live in America for a while, and Walgreens are all over the place. And I noticed there was a tweet in regards to this company because the share price fell 22% overnight. So this must have been on really bad results. Then I looked at the chart and went, oh, this chart is horrendous. This is the sort of chart that you have nightmares about. Not that I have nightmares about any charts, but the share price of this company has fallen significantly. So, in fact, in the past 2 years, it's fallen 75%. Then I looked at the weekly chart, and it's fallen from $96 down to $12 in the past 9 years. So this is an ugly looking long-term chart for a company that I thought would be doing okay. Market cap is 10.5 billion, so this is a pretty big company. Well, by our standards, it's big. And is there quarterlies in there yet? So just based off the last 5 quarterlies, they have a lot of revenue, like 35 to 37 billion dollars of revenue, and barely profitable, which is weird. So low margins. In fact, in financial year 23, $139 billion of revenue. Yes, billion, not million. $139 billion of revenue, and they had a loss of $3 billion. Before that, they had a profit of $4 billion, $2 billion, $456 million, and $4 billion. And revenue is relatively flat over the past 5 years. And the P ratio, I'd assume, is probably negative because it's... Well, I'm going to have a look at FinChat with this company. Just want to see what's going on. Where's FinChat here? Walgreens. Well, I don't know why I'm looking at this because the chart is ugly. There's no reason to even be thinking about this company, but it's good to show you how a bad quality company, unperforming quality company, says it is on the Nasdaq, by the way. Yeah, Walgreens Boot Alliance. Is that the right? Okay, so let's have a look at the revenue of this company over the past 10 years. And so revenue has been growing. So I will see this and go, revenue's been climbing. That's okay. I'm assuming margins have dropped. So let's have a look at the margins for this company. Let's have a look at the gross profit margins. Wow, look at that. That tells you a story, doesn't it? So even though revenues have been rising, gross profits margins have been dropping from 28% in 2014 down to 18.6% in the last 12 months. That's exactly what you don't want to see. And that's what a lot of times that's what I do when I'm researching a company. I look at revenue. I see revenue is growing through time, albeit slowly for this company over the past 7 or so years. But that could be okay if a company can maintain their margins. But for Walgreens, their margins have been dropping. In fact, they've been dropping at 4% per year over the past 10 years. And that would have a significant effect on profit. So let's go back to the income statement, have a look at profit. And yeah, profit has been dropping. It was as high as $4 or $5 billion about 6 or so years ago, which might be okay for this company. But remember, this company now has a market cap of $10 billion. So if this company can get back, start increasing their margins, get back up to $5 billion of profit, this company's cheap, trading on a PE ratio of 2. But the market is fairly wary of this company. And the questions have to be asked, why? Why are gross profit margins decreasing? Is it because of competition? That's probably the most likely reason. I don't know. Anyway, so that's a company coming in number 5. Top stock of the day, Walgreens. Hopefully you are not an investor in this company, which I'm surprised it's on the Nasdaq. Anyway, according to this, it has a dividend yield of 6.4%. I'll be very wary about that. And the very fact that the share price has dropped 22%. This could be the bottom, but who knows? People have been buying this because I thought, oh, it's getting cheap now, ever since about March 2022. All the way down, people have been saying, oh, this is looking really cheap, say based off $5 billion profit. So even if the share price or the market cap was, say, $30 billion, which it was not that long ago, if people saw, well, $5 billion of profit a few years ago, $30 billion market capitalization, this company is trading a P ratio of 6 if they get back to that profit. But the question is, can they get back to that? And I think there are serious questions when it comes to this company, Walgreens. Company number 5, or no, 4 and, no, company coming in equally at number 4. We have two companies that are quite well known in the world. Two clothing companies, and they are Nike and Levi Strauss. And they both have released their results. And unfortunately, let's go to Levi Strauss first. Now, the chart for this company actually looked pretty good. This is the daily chart. So Levi Strauss was on a beautiful tear, moved into an uptrend back in late 2023. And yeah, I could have easily taken a position in this company just based off the sentiment. So this is an example of a case where the share price is in an uptrend and the company releases something negative. But I would assume this is way more common in America because their market seems to be a lot more fickle than us. And they released their results. And funny enough, when I received earnings whisper email, it mentioned that Levi Strauss beat expectations. So no doubt, the reason share price fell 15.4% is because of fairly bearish forward-looking announcements from the company. So let's actually verify that. I'm assuming that. I could be completely wrong. I don't want Australia. I just don't care about Australia. Let's have a look at the news. Shares drop as quarter underwhelms, but okay. Well, according to this, their results actually missed. So that's earnings whisper was wrong. Here we have Motley Fool. Slight revenue miss. Let's have a look at this one. I've seen this quite often now. So narrowly missed second quarter sales forecast as its Dockers brand underperformed. They reaffirmed full-year revenue and adjusted earnings per share guidance. But Goldman Sachs analysts were disappointed the company didn't raise its guidance. Okay, so this is as I so okay. So they reported, or yeah, reported $1.44 billion in revenue, which did rise 7.8% from the previous corresponding period, and the expectations were for 1.45 billion. So they're just off expectations, and then their share price is down 15%. And this comes back to the market being fickle over there. You slightly miss expectations, slightly in this case. So I don't know what happened with that earnings whisper email. They said they beat expectations, which is wrong, seemingly by that news report. And the share price is down 15%. And I have seen this on occasion, and I have taken advantage of this, buying some company shares because they fell 15% in one quarter, and the share price went on a rally because it's just an overreaction. And this comes back to pods, something to do with pods, which I haven't learned about just yet, because pods apparently are really short term. And when they see this sort of miss, they sell, and then all the selling just stops. So it remains to see what Levi Strauss does after this. So possibly there will be a bounce. The other company is Nike. So Nike, yeah, if we look at the chart for Nike, you won't see. Why is my music playing? There we go. There's no music coming out of my speakers. Okay, so Nike, the chart for Nike actually doesn't look that good, does it? So you won't see any decrease or increase in share price here because they released their results after the market had closed, which is quite common. But in aftermarket or after hour trading, the share price was down about 12 to 15%. So let's have a look at some news results for Nike. Nike in a slump amidst this from the 9 News. After hours movers, Nike, actually, we can go to Nasdaq, can't we? Here we go. Nike shares tumble as it loses ground to upstart rivals, plunged more than 12% in after hours trading. And we can just go to the Nasdaq website, which do I have here? Yeah, I do have here somewhere. So this is the earnings calendar via Nasdaq, which features not only Nasdaq companies, but also New York Stock Exchange companies. So if you put Nike in here, and Nasdaq site will have after hours trading. So up slightly today in after hours trading, Nike share price is down, 12.27%. And more than likely because they missed expectations again. In fact, this one says Nike posts surprise quarterly revenue drop. Nike shares drop as slower demand prompts cut to 2025 outlook. So yeah, they're cutting their outlook, cutting guidance, and that's not a good look. So I would expect the share price to drop possibly even more than 12%. But even the chart looks pretty ugly. So unlike Levi Strauss, this chart doesn't look anywhere near as good. Anyway, so that's two companies coming in number 4 for the stock of the day. We have Nike and Levi Strauss. Now, Nike has a market cap of $142 billion. Can you believe that? $142 billion, a shoe company. And Levi Strauss, a jean company, probably a little bit more than that. I'm assuming this company has a market cap of maybe 20 billion. Let's see how wrong I am. 7.8 billion. Oh, I was a little bit off. I thought it might have been a little bit more than that. Anyway. Coming in at number 3, we have a company called Arovella. They did not release any announcements. Share price is flat today. And the reason this company has come in number 3 is because I hadn't really looked at this company before, but it did pop up on my radar because of the chart. So it looked like it was going back into an uptrend. So this chart actually looks really good. In fact, if you go back all the way through or back to 2023, you can see nice trend, nice pullback, nice trend, and beautiful pullback to about, so we'll say about 11 cents or so. And it looks like the uptrend is starting to move forward again. So we're starting to see the upswing in the uptrend. So I thought, I don't really know anything about this company, Arovella. And I looked at one of the announcements, and it was this one, Zolpimus. And I went, wait there, that's a name I do know. So somewhere in the back of my mind, my brain, it went, you know the word Zolpimus. I went, Yeah, but where? Where? And then I read the first paragraph here, and so many words just popped up in my mind. Okay, so Arovella refers to the license and supply agreement dated 4th of July 2017, so we do have to go back a fair bit, with Teva Pharmaceuticals International in relation to the Zolpidem oral spray insomnia treatment product. And for about 5 seconds, I was like, I know this. I know this company. I have a feeling this company has changed its name. And the best way to find that out is to go to Market Index, put in the ticker code for the company. And by this stage, I remembered what it was called. And if you go look at the snapshot section, Arovella Therapeutics, formerly Suda Pharmaceuticals. And that's how I know this company, by their former name, Suda Pharmaceuticals. I looked at this company many, many years ago, and I did have a look at this Zolpidem, and that's what they do. Or this is what they used to do back in the time. They were trying to develop and sell sprays to what's the word? Not disperse, to provide medicine to people. They were using spray. So this Zolpidem was an oral spray insomnia treatment. So instead of taking pills or injecting yourself, you just spray up your nose. I thought, that sounds interesting, but obviously this company is either succeeding with this technology or they've pivoted. And that's what I wanted to know. Has this company pivoted, or are they seeing some success in selling these nasal or oral sprays? So oral spray would be in the mouth. Nasal spray, I'm pretty sure they do as well. I'm not sure. And this was many, many years ago. They mentioned complete manufacturing scale up, which was interesting. But I had a look at, where was it? There's a presentation somewhere here. I think it was the EGM presentation. I just want to know what they did. Here we go, investor presentation. Scaling up. Oh yeah, I had a look at this, and every single word in this just went not over my head, but I didn't recognize anything there. And I think I saw that announcement and went, this company's doing something else. So then I went to announcement. This is the EGM, so we'll have a look. Oh yeah. So they have pivoted. Last time I looked at this company, they've pivoted to something that's intriguing, but interesting. I can't tell you anything about this technology, but it is cancer killing technology, cell therapy cancer killing technology, or something like that. So the products are still preclinical, not even towards phase 1. So they're in the very early stages, talking about solid tumors, expressing cancers, whatever that is. So they're still just in early phase or preclinical, not even in phase 1 at this point in time. So they're a long way from producing any revenue, it seems like. So at some point in the last 10 years, this company has pivoted and changed their name. But the main thing is the market likes this company at this point in time. The market cap is 140 million, 152 million. Chart looks okay. But again, this is a story stock. It's all about the story, about this technology. So you'd have to have a pretty good handle on the technology. Otherwise, you could just trade the chart. That's all you could do. But it's still a story stock. Still a story stock. I'm trying to remember what I was looking at. They're talking about all these transactions from other companies. So that's what they might be relying on to get into bed with AstraZeneca or Imugene or something like that, Gilead, to provide them with a lot of funding so they go through the trials, which is what a lot of companies do. Oh, here we go. This is about CAR T cells. So if you really want to know what this company does, look at this particular presentation. Page 9 tells us what they do, what it does. And they have this girl, Emily Whitehead, and I actually did read about her. So she did use, or her parents used this cell therapy on her many, many years ago, probably about 10 years ago. So cell therapy, so this CAR T cell therapy seems to work, but this company is still just in preclinical. A little bit too early for me, but the chart looks interesting for maybe just a trade. And definitely, you wouldn't want to own this company for the long term because the share price could drop 60% from 70% from here. Because these type of companies, the sentiment will shift quite dramatically. So just beware about that. Okay, so that's a company. The number 3 stock of the day, company called Arovella Therapeutics. Coming in number 2, we have Maggie Beer. Maggie Beer doesn't sell beer, or maybe they do. Food company. She's a chef, I believe, and she's just put a name to some more products, consumer staples. So they released a trading update, and for anyone who knows me, I love trading updates. So that's a simple reason why Maggie Beer is coming in number 2, because they released a trading update when no other company decided they would on the last trading day of the financial year. I expect with the share price down, it was not the worst trading update, but not the best either, because if it was a really bad trading update, the share price would be down a lot. Not a lot of trades, only 18 trades. So this didn't really excite the market, but it was a trading update. Is this company profitable? It's the first thing I want to know. A lot of revenue, but these sort of companies have or exist on really low volumes. I don't like these sort of companies. They manufacture, produce, sell food. But this company also sells hampers and gifts. So I'd say possibly that's the highest quality part of this company, their hamper and gifts part, division. They also have the Maggie Beer products, MBP, and Paris Creek Farms, which I'm pretty sure it has to do with dairy. And they mentioned also that the hampers and gifts, their sales actually did rise 1%. So $89 million of revenue, slightly ahead of last year, which was $88.7 million. So not much growth in this company. Gross margins expect to be marginally lower in the second half of last year, with the favorable impact of price increases being offset by inventory provisions. So nothing overly negative in this, but nothing overly positive at all. So group EBITDA expected to be marginally positive below last year's EBITDA of $3.2 million. Do they mention anything about? No, that's about it. I did have a look at this company a while back ago, and in the back of my mind, I just remember thinking that the hampers and gifts part of the business was the highest quality, and I'm pretty sure they acquired that business quite a while ago. So that's Maggie Beer, and let's have a look at the chart. So are we interested in this company at all? And I'd say the question, or the answer to that question, is no. This is this is the reason why. Look at this chart. I don't care if there might be value. The chart says no. Stay well away from this company at this point in time. And the markup cap, pretty sure it's pretty low. Markup cap is $21 million. Let's have a look at the weekly chart. Maybe share price has now fallen below the lows this company saw in March. Oh, it's right on those levels. If you actually put a line, the only reason you might be interested in this is if you draw the lows there. This is not quite the low, but it's sort of like the weekly low back in the COVID-19 financial panic, and just draw that line, which is a nice little support level, and go all the way back to now. What do you see? So we saw the share price of Maggie Beer bounce off this level back in March. Beautiful, nice little bounce, and it's hit this level again, and you can see it. It's oscillating above and below this one price point over the last 5 or 6 trading days. So I wouldn't say there's a fight between the bears and the bulls, but we do see a little bit of buying coming in because it's at a support level. But just the negativity and the lack of positive sentiment in this company means there is no bounce. There has been no bounce in the share price, and we have seen a little bit of volume coming as well. So that shows us there is a little bit of buying coming in. And on that day, the share price was at its lowest point, almost its lowest point. Anyway, so coming in number 2, we have Maggie Beer. Coming in at number 1, we have Pointerra. And share price up 16.7%. Was up a little bit more earlier in the day, probably up over 20%. So $1.6 million contract awarded by the US Department of Energy. So this is a good announcement. If they can, release more of these sort of announcements, that would be even better. But getting in bed with the US Department of Energy cannot be a bad thing. But the one bad thing about Pointerra, now this is not the sort of announcement that is really going to make me add to my position in this company. What I want to see is profitability and cash flow. This could help the company to achieve that in the future. But the other negative thing about Pointerra is just the negative sentiment in this company. I'd call it rancid sentiment in this company right now. And that never helps when a company releases this sort of announcement. In fact, you do see selling. You can see this little spike up in the share price back in March. Share price did rise 10% on that day, and the share price has fallen since then. So there was really good volume on that day. Don't remember what they released, but no matter how good the announcement's going to be, you're going to see the negative sentiment in this company drive the share price down. I'd say, without even talking to anyone else who owns this company, just based off the chart, based off what I have read elsewhere, there is a lot of ill feeling towards the management of this company. And the reason why is just the chart. This is an ugly looking chart. Back here in 2020, this was a market darling. Share price went to as high as about $90. Now it's 4.2 cents. Not only that, you can see this massive rise in share price back in July last year. So 1 year ago, there was a bit of excitement in this company. I forget exactly why, but look what happened to the share price since then. And today, just today, the share price has run up. In fact, the share price ran up before this announcement. But just today, we have seen a little bit of selling coming in, which makes sense because there's so many shareholders in this company who are in the red. Share price has fallen significantly since they bought in. That's why there's negative sentiment. They hate the management. Share price has dropped a lot. They want to sell out. They're waiting for the opportunity to sell out. So when the share price rallies, like today, or like in March, you're going to see selling. We have seen that today. So what you need to see is the share price to go sideways for a long period of time, or the company release a significant positive financial announcement. So that's the two things that could happen. The reason why consolidation period is important, because if the share price goes sideways and does nothing for a while, all those shareholders eventually become bored and they will sell out. And what you do is you get a rotation in the shareholder registry. So you get new shareholders coming in who might think there's promise in this company. They might have a look and think, oh, there's promise in this company. They're near profitability. And eventually you get new investors, new shareholders holding shares, less resistance moving forward. And then eventually, when the company releases a positive announcement, even if it's not a really positive announcement, that's when the share price might fly. Seen that plenty of times in the past. So that is the stock of the day, Pointerra. Now, a few charts. I'll go through a few charts, I suppose. I said I wanted to show you at least about 10 charts here. So let's have a look at Actinogen. So this did pop up on my radar a few days ago because of an announcement. And this chart does look pretty good. So 3 big up days in a row. In fact, the most recent day today has been the best, up 28% as we speak. Well, actually, not as we speak. This was 10-minute delayed. So as we speak, it's up 32.6%. So this, I would assume right now, is under the control of day traders. They love this stock right now, and understandably. I would want a little bit of a pullback. So we saw a really good run up in this company's share price back in January, February. You can see the share price went from about 2 cents to a high of 5.5 cents. And then we saw the pullback. And so day traders would have been excited. They became less excited. They all pulled out. And then finally, the share price has gone another run. So Actinogen, I don't know anything about this company. I want to do some research on this company, but this chart is starting to look more interesting. However, I would have preferred not this sort of run up today. But the share price is now at a long-term high, about over a 1 year high. Encounter Resources, another really good logging chart. Yeah, so this one broke out on the 24th of June, and I'm kicking myself because I was actually watching this chart and the share price pull back to 55 cents. I went, oh, this is a nice little pullback on decreased volume that day. And I thought, well, today might be a good day to take a position. This company, and then the next 2 days, it's gone on a bit of a run. And what I should have done was just taken a small position, tiny position, and built my position over time if the share price moves in the right direction. So that's one thing I could have done. So it's all about learning processes and what you could have done. So another good looking chart for Encounter Resources. And again, the reason why the share price is going to run is because it's at a long-term high, maybe even an all-time high. That's a good thing. No resistance when that happens. Baby Bunting's had a good day, so they released a positive trading update yesterday, and this is a little bit different. This is not an all-time high, not even a long-time high, but enough positive sentiment in this particular announcement. The share price has risen again today, up 5.4%. I don't think it's going to last. I think eventually this little bit of buying will peter out, and a lot of shareholders who bought at high prices in the past year will sell, and you'll see more supply of shares on the market, demand, and the share price will pull back. But step in the right direction for baby bunting. Clarity. I've not looked at the chart for Clarity for a little bit because it has not popped up on any radar, and that's the reason why. It's had a little pullback, dip into the short-term moving average channel, and now that's 5 up days in a row. So looking good for Clarity Pharmaceuticals. Spartan Resources, another company that has been popping up on my radar a lot. I'm assuming this, I was going to say maybe this has pulled back as well, but no. Another beautiful looking chart. Spartan Resources, it's probably getting a little bit too lofty for me right now. I'd like to see a pullback towards about 80 cents. Biome, another one where we have seen the share price go on a pretty good run. Yeah, this is a pretty nice run for Biome. And just like some of the other companies, I love to see a little bit of a pullback because the share price is way too far away from at least the 50-day moving average. That's sort of the pullback zone. Between the 25 and 50-day moving average, I like to see the pullback in that zone because who knows which way the share price is going to go back from here. Could keep on going higher, but there could be a significant pullback. And if the share price does pull back, we are talking about the share price dropping 20% in a fairly short period of time. That definitely could happen to Biome. Doesn't mean it will happen, but it could happen. EZZ Life Sciences, a company I do own, and this is fairly similar. Share price is on a tear. And those people who sold their shares at $1.20 on the 24th of June are kicking themselves right now. Yeah, there was a bit of panic on that day, and share price has now rallied 50% since then. That's in a day. Gee, share price in this week has, well, yeah, share price this week is up 28%. Last week it was up 21%. Yeah. So this is another case where I would not be adding to my position. I'd be waiting for either share price to go sideways or a little bit of a pullback. That's the other thing. I probably should have mentioned some of these other companies' charts like Biome, Spartan Resources, Encounter, and also Actingen. Is I've been talking about a pullback, but sometimes you'll see instead of a pullback, share price is going sideways. And what I mean by sideways is COSOL. COSOL is a pretty good case. So you can see here on the 22nd and 23rd of May, COSOL share price went on a bit of a run, 2-day run, but it was enough. Share price rallied probably about 15%. And then for 2 weeks after that, share price just went sideways. That's what I like to see. So no pullback, share price just went sideways. When the share price goes sideways, there's no selling, very little selling. And then all of a sudden the share price just pops up on the 19th of June, up 7.8%. That's what I mean when I like to say, if you don't see a pullback like you did see with COSOL back in January this year, if you see the share price just going sideways, that's typically an even more powerful sign than a pullback. And the final company is Immutep. And yeah, 2 bad days in a row. I think I did mention this company yesterday, and the share price drop was not a good drop. And that's sort of confirmed today. We've had 2 bad days in a row for Immutep. Nice looking chart. Unfortunately, I have mentioned this in the past, that when you do own companies that are under an uptrend, you're less likely to have a bad announcement, but not 0%. So sometimes you do see bad announcements from those companies that whose share price is in an uptrend. But most of the times, bad announcements are released by companies whose share price is already in a downtrend. In a way, the market has got this wrong. The market is mostly right, but the market has got this wrong. Released a bad announcement and the share price has been punished the last 2 trading days. Okay, that's all I got for this particular video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.